Oh, I thought this was. Where is it? Yeah, it is. Oh, I thought it was. Good morning. Unnatural. Still gotta check it out. They say a YouTuber is pumping us. But when this was up 2 days ago, I looked at it and saw it was gold. I thought it would move a lot slower. It's also $2. Float, 300 minutes. Don't have to worry about running out of shares. What that? Opened it. Reverse split on AVGR. Is that what that is? So with a reverse split, we understand that this makes it a fresh chart. On a fresh chart, there's a lot of things you can do, but most of the time you're looking for something like a gap up short. Because it's a fresh chart, that means no resistance in the history now. HVEI. My only thing is just seeing that like big spike, because reverse split. What kind of split is it? Like 1 to 10 and stuff like that? The way you check is you go to the filings and they'll tell you what type of split it is. Oh, rolling. So They said they did it at 0.0. No, that's where's the actual price? Well, it did go from like 17 cents. Okay, I can't find the number I was looking for. Like I got the split ratio, but not the actual we went in at $5 or we did this at $2. It actually says there's a ratio between 1 for 5 and 1 for 20. And like this par value for 0.001 really doesn't do anything for me. Yeah, let's make a ratio. Yeah, because multiplying it by 20 only gets it to $3. How'd it end up at 24? If it was a 1 to 10, it'd put it at like 170. Well, no. I've seen like 100 splits up to like something ridiculous. So, morning. How is the market? Morning, Dontez. Message retracted. Reverse split at AVGR. So disappointed about HYMC. Yeah, HYMC, it's gold. It's it ran 2 days ago, and I was real happy to see something up like 100-something%. Or something turned me off to it. I think it was because it was gold that I understood that the hype wouldn't like last very long. And I think it was the same time that Marigold was also up, because people are not trusting the dollar right now, so they're trying to secure their money. What do you call it? I kind of wanted to add on SPY at this spike, but I thought it would go up a little bit more. I just got emailed my CPI report, and I was over there trying to make sense of that. Wait, wrong button. I was trying to make sense of that. It looked like I was expecting to see something like, oh, it went up a quarter point, it went up half a point, like something like very clear, not the actual like them trying to hide the numbers between like services and demands. I'm like, it's too early to be doing math. But main thing is, what do you call it? Main difference. No, I'm not gonna say anything yet. I haven't refined anything. Might just tell you tomorrow. Yeah, but the summary they want to give is increased by 0.8%. You look at their numbers, it actually says like 0.9. Demand for goods increased by 2.4. You go in there, it looks like it actually did it by a different amount. But I don't trust these numbers anyway. Like, unless they're adding these two. Demand prices moved up 10%. Okay, I can see that. For the 12 months ended. I'm gonna do it over here. Yeah, but let me double check to see if there's anything actually running before I start doing more like research. remember we're looking for the back end of those energy sectors too. So like AVGR with this fresh chart, let me double check and see if there's any extension. That other, no, just make AVGR. No, that's 2%. Nah, and there's no volume. Okay, that's probably why I didn't put it on in the first place. What I was doing now. Oh yeah. Yeah, ENSV. Nope, still down there. Something that came back from yesterday was AGRI. So yesterday I went in like 4 different entries. Like when you guys left, I had an average at 430. After you left, about 5 minutes, I borrowed the same amount of shares again at like 4 cents or something before it shot to like 16-20 cents. And you know, I sprinkled that over the like 60s and it brought my average up to like 40. Pretty much what I'm trying to say is like, you know, it went all the way up to the 480s and like, you know, came all the way down. And I'm at this point where I'm just like, I'm really hungry. This range is a subpar. I have all the resistance in the world, but I'm like, do I have enough patience to go past like, you know, my hunger? Eventually I ended up covering at 435. 5 minutes later, you know, it drops, but I had no FOMO because I got a big handful of like, I think it was Chick-fil-A. Yeah, it's some Chick-fil-A. And that was the end of the story. It was a good trade, you know. Stock traded for chicken. Yeah, I let that seep in. But other than that, this went down to 350, which was, you know, reasonable, considering its like his market cap was pretty low. So that means it's a lot easier to make this run because it's a small amount of money required to raise it to 100%. Market cap was, you know, 12 or 8 million, something like that. So it was pretty hard for you to like run out of shares. Yeah, 12 million, 42 million float, resistance 250 million, total volume 113, up to the top like I think it was like 30. Yeah, but at the end of the day, wasn't ideal. Took my shot, slightly regretted it because I didn't make preparations to like, you know, not get distracted. Like main reason is I would have kept doing that if I just focused on the ticker, probably brought up some like YouTube videos or like anything in between to keep me distracted. But where I messed up is I opened the chat after that, and then everybody's just like, why isn't Dux trading this? Why isn't blah 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 trading this? And then like, you know, I feel like I'm looking back because the entire team's just like, oh, anybody that trades this is over trading. And I'm just like, rah. This is why I don't like open the chat like while I'm trading. All this FOMO, like in a different way. It was annoying. But eventually I was just like, yeah, I don't want to set too much of a bad example. But I will set a bad example. But what was I say? Next, HUSA, I think. This is still down, waiting for it to pop back up. ENSV. The other one was the USEL. Okay, maybe I just made that ticker up. Okay. Yeah, still down. All right, then we're dead today. It's pretty much what we're trying to say. There's nothing to trade but KAVL. That's a famous ticker we know for the past like 3 months. See what's going on with this. Hi Dontez, usually when the stock drops, shouldn't the put option automatically increase? Sometimes there seems to be a time lag, or will you be able to share how they actually value it? So if you know anything about the Greeks, pretty much when it drops like that, it's messing with the volatility. And if the volatility raises, then the price is going to rise faster than the stock price drops. And then like it kind of neutralizes itself, especially when it does it like very fast. And like at the end of the day, it's really hard to judge like how they value these prices. And so it's better to just like do it a lot and then get a feeling for it. So even I can't give you like a straight answer, but I can give you like the answer that all the other like research that I've looked at has given me. But I don't even think that would help, because like the same thing happens on the SPY. Same thing happens on the SPY when I look at the way it's priced. No. I took a specific chart for pricing, but I forgot what to do with it. Okay, so yes, I'm not gonna start opening up stuff. What do you think about AGRI today? AGRI today? Wait, did I talk about it already? Okay, so the thing is, when you have these stocks with resistance in their history, the things that make it a trade is the range and then the amount of back holders or resistance at a certain level. When we had that come up yesterday, all those back holders from the previous time, they had a chance to get out. So there's not as much resistance up there. When it went back during the after hours, people already released most of those back holders. So if it goes up now, after that point, because people are just like, oh, I missed it in the after hours or pre-market and stuff like that. If anything, I think it'd be a potential breakout at that point, because it's already gone up there twice. Only thing that's a little like iffy would be, since it went in there like after hours. So you got the people like doing futures and stuff that got out here, and the people doing intraday they got here. That's pretty much all I think about that. So if I did anything on this, I'd actually be going long, trying to get all those people there. But my confirmation wouldn't even start until like it bounced off of there and then came down and then try to retest. But in terms of like getting in like right now, that'd just be weird. I don't even know if it has volume. Yeah, right now I just don't see anything worth like trading or looking at. But what was I looking at? I think it was KAVL. Let me get my toxic yawns. 130. 3. A whole dollar. it's kind of too spread to actually use it at the same time. Like these two, you add them together, like in the breeze, that's where you 200 at the 3, but there's no extension to like actually take advantage of it. Even if you did start 30, get up to 3, that'd be the best scenario. And then you probably go for like 30 cents, probably get it down to 220. But the chances of that happening are pretty low. Space. Okay. Done. Oh, it's only 10. Yeah. Ah! Something else I was doing. Forgot. Oh yeah, SPY. I could do a better job on explaining that. I think I have it. Oh no, I know what I can do. Not that. Yeah, there we go. It was a specific chart that like it just made sense to me. Yeah, I'm not gonna just start searching for random stuff. If this is, hey, it's finally on. All right, energy sectors failing. You see, oil's all the way below $95 now, whole $30 off its top. So there's a reason that energy sector's not like it's hype anymore. The hype's disappearing. War's still happening. Another thing. Really just want to like wait for the announcement for the Fed like tomorrow, but I want to see what kind of temperature the market has right now in terms of like their fear. What's that one index? Yeah, hold on, let me pull up the chat. Realize not the chat. Bless you. We had some simultaneously sneezes. Bless you too. Our testosterone cycles are cycling up, man. That's the first time I heard that version of it. Warm smile. Yeah. What's that doing? I can feel like my sinuses like being flicked by something. I just don't know what. I've been washing my hands. Probably that Subway sandwich. Yeah. No reason to speculate. What am I doing? There was something else I wanted to talk. So today, since I'm still thinking, oh, it went down to 13 in the middle of the night. Okay, but I'm still thinking there's supposed to be an announcement from the Fed tomorrow. At some point today, this is going to like come all the way down. And like when I say all the way down, I'm talking about like below 410. And so I have 12K right now. And since there's no play, I'm just about to just throw this in there. Yeah, you know what? Instead of talking about it, I'm just gonna do it now. Yeah. Because even if something does come back on the back end, if it's bounce short, that's the only thing I would really go in for. Unless something pops up like over 100% and it's before 1 o'clock. But I need some time for it to go back down. And I wasn't going into the HYMC. Like when I think gold, I think like the catalyst is always hard to figure out what it is. And plus the not the fundamentals, the market cap float on that was kind of not the best. Yeah, 90 to 350. So when I see 350, I can see like, you know, you have like a lot of incentive to come down, but you're still a healthcare stock. You have a high enough float to where, you know, the chances of you going up are pretty low because there's too many people in there. There's not going to be like rotation. When you see this high float, that also means that there's almost 100 million people that can potentially get stuck at a single level, potentially, but unlikely. So when I see this go up to like 100+%, I'm thinking, you know, what is the catalyst? And then I saw this and it looked like it was their earnings. And I'm like, I don't know about that. Especially when the sector itself was, like I thought it was red before. But on the weekly, yeah, I just don't like it. Yeah. I've had way too much beef this. Switching to fish. But when will you close your position after it drops below 400, or will you wait until it close to expire on the 30th? I'll close my position when it's below 410. So, what do you call it? The thing is, I'm trying to get a very specific momentum. And like, when we were talking about the prices of the stocks before, that volatility, I feel like there's another word for it. But that volatility, that also adds to the price. And I want to like kill that momentum, because at the end of the day, this already cracked a support at 420, cracked a support at like 435, 443, 450, and like it's already touched you know, the low 13, 14 area for a while. I just want that final 410 to crack, and then we'll look for another 2 weeks of like lower lows. In each part of those like lower lows, we're not gonna die like right away, or like the ticker's not gonna die like instantly. And so that gives me a lot of opportunities to like, you know, go back on a bounce, or if anything, like, you know, temporarily buy a call. Because if we're looking at trading everything like a week at a time, we're looking at like $10 to like $30 ranges. And every time you break one of those supports, you bring the whole thing down by like about $10-15, depending on which way you're going. And so I pretty much started this stuff in February. And back then, that's where we were at 460. And then every time we cracked a support, we brought it down like $10. And so remember, the highest resistance was at like 460, and it was strong. because it was the last thing holding it back from last time it came from like 480. So it went from 480, took less than a month to go all the way down to 420. Like now that's a $60 like range created right there. And now, you know, with in stocks and technical analysis and stuff like that, when you have a consolidation and when you have you know, big drops and big gaps, they're going to get tighter and tighter before they just like consolidate, and then they're going to consolidate enough until, you know, it cracks. Well, with indexes and SPY and stuff like that, it's slightly different, where I don't want to say like manipulation, but it gets more into like it's the same kind of actions, it's just a lot slower. And so this $60 range right here just became 30, and then like it just got tighter and tighter again. Now it's just starting to open up, and it did the same thing over here. But in this case, like we're in a bull market, but now we're switching into like a high volatility into like a recession. And then the thing is, people are going to slowly wake up to that, and by the time they like really wake up to it, it's going to be at like 360 below. And then, you know, it's going to do that for about, you know, 5-6 months, could be longer, until we actually start to find some type of support. And then that's where the penny stocks come back, like when we're growing. But in the meantime, I'm what do you call it? I'm just trying to expand my horizons, is what I want to say, but there's another word for it. Yeah, so like, see how this went already to 410? Like that makes this one the support. So as soon as it cracks this, it should be going to 400 next. And then once it actually gets past 400, that's where we're gonna wake people up. And when people get woke up, that's when you can just like, any money that you made on like these volatile bounces, like call or put, you can put it all in at 400, because like when it cracks that, it might even speed up like back to that kind of rate, but don't really know. Because at any point, any one of the top 5 companies in the SPY and or wars or any excuses from the Fed, like all kinds of stuff, Biden saying something about renewing energy, they all can like temporarily save it, but that's only temporary, and everyone has to be on board with temporarily saving it. But not the one I wanted. Market watch. There's a very specific one I want. I do like watching Market Watch though. That's fun. What I was doing. Yeah. I forgot what I was doing. It's fine. I'm doing. Was I adding more? My thing is, I just want to keep money in here for the small caps that do come up, because my tendency is like all or nothing. So like trying to do stuff in between, that's where I have like self-sabotaging kind of tendency. And so I'm just like, but main thing is, if we're talking about like, you know, if we're on a boat and like we have a sail and there's a wind, the Fed is causing the wind. The fear of like the value of the dollar is causing the wind. And, you know, it's more of your lack of awareness that's causing that fear. But once they make the announcement tomorrow, then it's going to be confirmed how much wind we actually have. And then, you know, if it's not as much as people expected, then that's going to, you know, increase, it's going to decrease the wind if it's not as much as people expected. But if it's what they expected, then it's going to, you know, increase the wind. And I want to just be riding the wind. It goes into that. I could definitely did a better analogy. Like, ride the wave, man. Kahuna. Okay, I'm done. Not the big kahuna. That's Steven. I'll be the kahuna though. Thanks, Dontez. May I know how do you calculate your stop loss before you enter this option and size you are going into? Well, I'm in there 50K. Instead of making things like complicated doing strategies and you know, keeping like very fixed risk, what I did was yeah, so you know, I put works. I just like looking at the charts, but pretty much I try to do all of my positions out of the money, and I know that it's going to expire. It's going to expire worthless, and so I try to give a little bit enough time for me to at least get halfway to the point where so pretty much it's like, if I think the stock is going to drop within the first month, I'm actually going to get like a 3-month contract to ride the snake. But yeah, if I think the drop is going to happen like within a month, I'm going to get a 3-month contract, because the time decay is going to eat me like at an accelerated rate. I really want like a very specific chart. I think I saw it before. Option time decay. Let's just put that one, because that's the one I mostly focus on, is time decay. Oh, this is a good one too. So pretty much there's like different speed and up levels in that last 30 days. That's where you just start like losing a lot. But that just depends on if you're like in the money or out of the money. Yeah, and that's pretty much it. Yeah, so like I just try to get like a little bit more time than I actually need. But at the end of the day, if you get in the money, you still have that intrinsic value, like even when it does get to the point where it's almost expired. But when you do out of the money, you can leverage the price of the premium a lot easier. So if you go to this 400, you see, you know, we're $20 out of the money right now. That's why it's $17. You go to the point where it's at the money, it's $24. So that's a good, you know, $8, $7 difference. You go to the point where, you know, what would that be? $30 in the money, because this is a call. You can see it went all the way up to $40. But when you go to the puts though, if I go $15, like, no, I keep forgetting my 420. But if I go to the at the money, I'm at 24. If I go to $20 out of the money, I'm at 17. And so it's like similar to the call. I forgot what I wanted to say. It was like something like related to like supply and demand. Um, it's something about like 10% away from your strike price. So if like the current price is like 420, and then 10% on this $400 stock is $40. You go all the way down to $40 out of the money. You see things go to like $13. If you can actually time the point where a fourth of your like contract expiration date like actually hits this point, I feel like it could be something similar to what we did at the 460, to where when I went in at 450 460 area, the price for the puts here were anywhere from like $4 to like $9. But you see how they're like 50 60, which means if I held it for 3 months, I could have got 10 times my money. Actually, it wouldn't even been 3 months, it'd be only 2 months. And so the thing is, like, that leveraged like so much. And if you open up any one of these charts, and then click on it. What was my first one? At 400 for April? Then I had one for May 1st. So back when it was 450, 460 and stuff like that. I was in at like 7, 8, somewhere around there. And the highest point where this 18 is, that's February 24th. On February 24th, on the SPY price, that's when it's at 410. Now the thing is, like, with that, there's always like a small delay to where you have to let the price like adjust, and then that's actually volatility. And so they're not talking about like just volatility on the daily, they're talking about volatility on the full like stocks price action, like not just on the not just like intraday, but like on the daily. And so if anything, you sometimes have to give it like a full day or wait till it like comes all the way back. Here, I can't cleanly say it, but pretty much like when you see this 18, like the highest price it ever got, if you try to get as much detail as possible on like when this actually was, it's actually not the bottom of the price. It's like somewhere like adjacent to it. So like if you go to this one, it's like 9:35, like a clock at the 24th of February. But if you go on to the we're at the 3-month 15-minute. Yeah, so on the 24th at 9:35. See, like this is the bottom of the price. But notice how this changes. Like we're still intraday. At the end of the day, this went all the way down to 10. Like, half the price. Yeah, about 11. So compare that to where it actually like went 410 to 430. Okay, yeah, that one's kind of weird though, because that's a whole $18, which is, you don't see that pretty often. So like this gives it a lot of momentum on the bigger picture, and that's what makes that price like such exaggerated. and like those kind of like momentum, like giving or taking, that's what actually gives the pricing for the premium. And the thing is, like, you know, when you're starting, only thing you see is this, and then you're just like, whoa, why is the price going up? And then it becomes that, and then the more you like see something like that, you don't know if it's going to actually reverse like at the end, and then at that point it's just going to neutralize itself. That's where the gamble comes in, because like you can make money off of like the price difference, but then lose money off the volatility. And so it's weird, but it's definitely like an edge in some type of way. Like this day where, you know, it's consistently going down, like all these days put together. How do I explain that? So what is this day? 24th to 16th. Let's see how this looks. 24th, 16th, all the way from $7 to $18. So you can double and a half, like almost triple your money. And if you look at the actual dollar traveled on that amount, where are you? Oh yeah, you're stuck, right? Yeah. 45 to, did I say 16? Yeah. So 45 to 10. So that's $35 to triple your money on a $400 stock. Versus it was half when you went up $18 in 2 days. And so I could just do that one. Yeah. Like, I don't know, it just makes sense to me. Like, I still haven't refined the thought, but that's what I think about when I'm in pricing. But when it comes to like, what do I risk? That's that really just depends on how much time decay is there. Because at the end of the day, I know it's gonna come back. And if it doesn't, I'm pretty much willing to lose it all, up to half. And then the stuff in between is more of the opportunity cost. And so it's whatever that's worth to me. If that makes sense. Okay, cool. So this is 5% away now. I wanted to give it room to breathe so I can actually add into something higher. But I don't want to just put in money for 5%. Still 5% of 10K. Yeah, I can make more if I just leave it for penny stock. So, oh, I'm dead. Where'd the chat go? I have so many tabs open. Right, the snake. Yesterday, you said that AGRI was going to push at least 430. How did you know? You said something about early shorts. Obviously, early stock doesn't push. Oh, every stock doesn't push. Was it based off its dropping and volume? Lag question mark. So AGRI, it had a low market cap yesterday, and the float was it was small. It wasn't a micro, but it was small. The amount of volume traded before that that 250, that acts as a support. It's actually a resistance, but it acts as like a comfort for the shorts, but it also acts as like a target for the buyers. When it came to like going past that point, there's a certain amount of like extension that came from, you know, pretty much Stevens statistics, like the same stuff that you see with what do you call that? Okay, so there's like biases for longs and there's biases for shorts. At the end of the day, you can see the tickers that fall into both, to where, you know, some are trying to win that short-term money, and some are trying to like win the long-term money. When you get into that 20% to like 50% on like the range, there's still a lot of like uptrending momentum there. When we went in yesterday, we went in below that minimum for the short biases, but we were still within the minimum for the long biases. And so the chances of it going up were higher than the chances of it going down. The only reason we were in there in the first place is because we felt comfortable because the other criteria were met. So it technically wasn't a pattern, but it had the same like tacit knowledge, or the same concepts and pieces to a actual pattern. And so, you know, someone said it right the other day in the chat. If you gave that ticker a rating, it would have been like 1 out of 5. Like if you just looked at it for like its criteria, but it actually, like with the amount of resistance given, it probably would have been like something like 3 out of 5. And Steven only goes for like, you know, those 4 or 5 out of 5 tickers. And at the end of the day, you can pretty much trade anything, and it's a chance game. It going up like past that point, that was just like points I'm used to what do you call it, like seeing. And at the end of the day, it's just pattern recognition. So yeah, I think that answered it. I hit it from like a lot of different angles just to make sure you got it. There's something else. Lag, question mark. Yeah, me all the time. SBFM. I'm gonna look at that, then I'm heading out. SBFM. What is this? I think I've heard it before. Okay, the dollar range on this is almost $2. So it's kind of too spread for me. I feel like too comfortable. And it's only 65 million volume there. So you wouldn't even know where the back holders are like accurately. Okay, it's a little tighter on the actual daily, I think. No, it's still $2. Well, it's reached the top of it, so that's well, that's already too late then. The best entry would have been up here. Yeah, nothing. Yeah, and if it goes back up there, like it's only 60 million right now, so it wouldn't even be really worth it. But this volume is kind of pathetic. It's like almost 1 to 10. So if you consider that, yeah, you could still have another chance of getting back up there. But the reward on it though would be yeah, the extension's not ideal. Yeah, because you got $3 up to 470. That would have been the only one that's pretty decent. Anything under that, like 3 to 4, yeah, that's not worth it. Yeah, because it'd be like 40%. No, we're good. Half of the premium paid. Yeah, because at the end of the day, for the options, you're trying to leverage the premium. You want to get the smallest price and then find the timing for when it triples, doubles, moves the most, and then get the contract that gives you enough room, because at the end of the day, it's an insurance for someone else. And so if you're buying a put, it's an insurance for the calls. And so you want to be able to get to the point where it gets to its highest value, and then you're trading that premium. And so when it gets like, you know, overpriced and stuff like that, you give it away, and then it still has a month, it still has a week, it still has whatever amount of time, and then when it starts going down, that's someone else's problem now. You're just trying to make that money in between. That also depends if you buy the contract or you sell it. Like, yeah, there's other people that could like show you about that part, but yeah, that's the only reason it gets a little bit complicated, is because like I can read slightly the overlying price, but the premium price, that's a derivative. And so like there's all kinds of extra stuff in there, but there's also scenarios where that extra stuff doesn't even matter, and so I only go for those scenarios. Nope. All right guys, it's 10:30. My nose is stopped up, and be safe. See you guys tomorrow. Peace.